Thank you, everyone. Thanks, Siddharth, for the lovely opening note. I think, as you suggested, we are at a cusp of a lot of changes that we are going to see across the manufacturing side, the software side, the services side, right? And I think one of the largest enablers of that is going to be ServiceNow, given the AI-enabled automation that we have to see across all the sectors that Siddharth mentioned. So I think we have an interesting panel out here. So I think one of the larger deals that happened, one of the marquee deals that happened early last year was the ThirdEra deal, where Tim here from Cognizant was able to make a deal with Mike here at Sunstone. So I think we thought it'd be fun to kind of get all these culprits for that particular deal on one panel, kind of grill them on the what's whys and the what nows. So you guys want to introduce yourself, and then I can get started.
Hi, Tim Crowhurst. I lead corporate development at Cognizant, and I did not sit far away from Mike intentionally. We're actually friends. So,
Erica Volini. I am the executive vice president for all of go-to-market at ServiceNow.
Jason Wojahn, CEO, co-founder of ThirdEra, now ThirdEra, a Cognizant company.
And I'm Mike Biggee, co-founder and managing partner with Sunstone Partners. We are a private equity buyout firm, technology investor, but specialize in technology-enabled services companies. Cloud services and this whole DX convergence is a space we've been investing in for the last 15 years or so, and very proud to be a ThirdEra, a family member of ThirdEra and now part of Cognizant. So thanks.
Cool. So I think I'll get into the bits of the deal, but I think first I'll keep it on point about the AI discussions that we're having. So I'll just first kind of touch that topic, and then we'll move on to the deal dynamics. The first area that I want to touch of the role of AI in driving growth for the ServiceNow ecosystem. So Erica, probably I just want to start with you. Then what I want to ask is, how do you think AI is shaping the partnership ecosystem for you, given that's what you spend most of your days on? So how do you think that is kind of changing your strategy?
Yeah, I mean, let's face it, everything in our world is AI. If you've listened to any of our earnings or anything that Bill McDermott is saying, that's our future. The way we look at it in our equation is very simple. We say it's AI agents plus data plus workflow. And our value proposition goes along with that. We believe in the workflow space. I don't think many disagree we're the dominant player and have been for many decades. The beauty of that is that we have trillions of workflows that creates a whole bunch of knowledge that can help make sure that those AI agents can truly drive the transformation of work. So then we build AI agents on top of that. We give our customers and our partners the ability to build their own custom agents. We orchestrate those agents, and then we pull in data from the Snowflakes, the Databricks of the world, through what we call Workflow Data Fabric to feed those agents. And that's our future in a nutshell. That's where we're going. So when we talk about partners and when we think about the ecosystem, I thought that slide on the evolution is really interesting. We are looking at technology services companies and saying, who is upending their model to put AI at the center? Because the ones who are not only bringing AI to the market, but are actually looking internally and saying, here's how we're going to use AI in everything we're doing, those are the ones that tell us they're serious about investing in AI. And the partners that have stood out to me are the ones who are really embedding it at their core. I have partners right now who are telling me, hey, we're not going to be a systems integrator anymore. We're going to be an AI-first IT services company, and we're going to approach services through an AI-powered solutions lens at the beginning. Fascinating. Tons of our partners are doing Gen AI COE launches all over the world. Love it. The more industry specific they are, the better, because industry is going to win the day. It has to be business transformation oriented. So I do think it's going to upend the market. I'm not sure it's going to be all new players. I think we're seeing a lot of the legacy players catch up and do that. But the ones with a heavy degree of human infrastructure are going to struggle to get there because they have a lot of transformation to do versus the ones that are coming up small, nimble, haven't built it yet, and they can go more quickly because we need to go quickly and we need to do it at a pace and a scale that's unprecedented given the growth that we're driving.
Sure. Speaking of partners, Jason, you are probably you're probably the largest standalone ServiceNow partner. So what are the customers currently asking you? What are they demanding you from an AI perspective?
Yeah, we spend a lot of time talking about AI with our customers. Every board in the world is pushing AI agendas down to their organizations. Most technology organizations within companies, CIOs, are struggling to make it real. You might be able to look at a co-pilot functionality or something like that, but bringing it into the enterprise is a different issue. This is why ServiceNow, in my opinion, has an advantage. It's got the contextual data model, the ability to abstract data from many different sources, unify the experience level, but then present, agentic or other AI technologies to it. So what we're doing is we're spending time with our customers just getting into the real layer of work. What can we do to assist your humans with a machine? And how can we better create automation and taxonomies of data to help you get more value across the enterprise? We're spending time with our customers, helping them get future ready. I was just with a customer this morning who is struggling significantly with their AI agenda. And my view is very simple. Let's just get in and let's look at how work's done. And let's look at how we use the investments you've already made, in this case, ServiceNow, to get more value out of that. So everybody's trying to go there as fast as possible. I think people are spending far too much time worrying about algorithms and learning models. Those are important, but those are largely automated in an AI space.
Right.
It's really about getting into the workflows and helping enterprises understand how they work end to end so that you can better present those automation cases.
Correct. And Tim, so Cognizant has, I think, a public statement which mentioned that you have aims to kind of create $1 billion ServiceNow practice, right? So how do you kind of look at integrating AI into such a large, and you're coming from scale as compared to anybody else. So how do you think about it? And probably to Erica's point as well, about how some of the giants are also kind of being more nimble around some of these areas. So how are you integrating that?
By the way, it's $1 billion plus.
Yeah.
Plus. Well, I think it's easy to circle $1 billion because first you start with the pervasiveness of the opportunity that exists around ServiceNow and the way that it is really driving enterprise automation. So as we think about it, we look at no more important priority to us than really how do we infuse AI into our core. So we are making big investments in agentic platforms. We have, I would say, incredible breadth and capability to bring to bear to this. And so a partner like ThirdEra, which is incredibly deep in the halls of ServiceNow and across all the offerings and platforms and emerging initiatives of ServiceNow, is incredibly strategic because it helps us stay really proximate to where the motion is in ServiceNow, who are obviously leading the world to push out in enterprise automation leveraging AI. So as we think about it, our core strengths really are domain depth and client intimacy, and honestly, some of the things that give us a foundation for the upper right side of the chart that was up there a little bit earlier. And so we think about it as combining those things. We stay aligned with ServiceNow. We have big, ambitious, audacious goals with them. We've bought the best company in the space to help us get deeper there and push out with differentiated capabilities. And we are putting AI at the center of everything we do. And so that helps us, we think, provide a differentiated offering to clients who are on the ServiceNow platform, which is substantially all the clients in the world, and looking to embed AI at the core of their workflows and offerings.
Correct. And Mike, from a private equity perspective, right? So that's got a pretty incredibly difficult job for you to kind of assess, given how AI has got pervasive. So whenever you look at any organization in the partnership ecosystem, ServiceNow ecosystem, or any other partnership ecosystem, how do you kind of look at, hey, what's the potential growth that's going to come out there, or even from a value creation perspective? So when you assess an asset, especially somebody dabbling in the partnership ecosystem, how do you kind of think about it today?
Yeah, we look at it with two vectors. So first of all, every major platform out there, whether it's the hyperscalers or certainly ServiceNow, Salesforce, certainly everything about AI and building AI into the platform. But the reality is, it's still very early innings. And I think this stat has been floating around the last 3-4 months about 80 to 85% of every AI project within an enterprise fails today. It's like Gartner, McKinsey, the Goldman came out with that too. And so when we look at services companies today, we look at these two vectors of the opportunity. One is this tailwind of the picks and shovels model, right? That's the enablement piece that Siddhant talked about. We're still early, the gold rush is happening. Can you help enable it? I think that's interesting, but that's kind of a temporary wave. What's more interesting is the second vector, which is eat your own dog food type tailwind, which is what, Jason's talking about, and what, when we exited ThirdEra, we were in the, mid innings of is embedding AI. And when I say AI, I usually include the word automation next to it, because to me, it's more broadly, how do you automate more shit within a services company? And so that's the eat your own dog food model that we look at quite a bit, and is a reason why we love KMS so much, our recent investment. And how can you completely change the narrative around a services company, and with regard to how fast it can grow, how profitable it can be. When we started Sunstone, that's why we picked tech-enabled services. It was, we believe in the next 20 years that a P&L of a services company can look even better than the P&L of a software company, a SaaS company. So whether you call it SaaSification of services, or we kind of call it services as software, that's what we're thinking about over the next 5-10 years. If you talk about ServiceNow and workflows, certainly the dominant player in the world with AI and with automation, why stop at workflows? Why not actually do the work as well? IT help desks, kind of a tough business, but if you can completely automate it, why stop at ServiceNow just providing, the workflows? Why don't they provide the automated help desk?
Got it.
That turns into a services model as software, and I think it's different expertise that us services companies out there are going to have to certainly navigate, pivot to, and leverage, because I think there'll be a lot of opportunity with that shift.
Got it. I think now I'll move to the dry part of things probably, which I kind of alluded to in the beginning, right? I mean, this was one of the marquee deals that kind of went in. So discussing specific on the deal side of things, right? So Mike, how do you scale up something like a ThirdEra, and how do you make it attractive for someone like Tim to kind of snoop around the asset? So how did you go about that one?
The first lesson I learned is don't build it to an outcome. If you build a great business, they will come. Don't try to solve for an outcome. But I mean, I think it's three really boring, most important parts for us is size matters, scale matters. So we try to build lighthouse companies in an ecosystem. So when we're looking at an ecosystem, can we build the largest, the best, historically the most global partner in that ecosystem? And if we can't, we typically stay away from it. So that typically means M&A. We average about 3 add-on acquisitions per platform company. There's a minimum viable scale in order to start building that lighthouse mentality.
Got it.
And so with ThirdEra, that's what we started out with, is 3 acquisitions pretty close together. And then the shifted then from just scale to very strategic tuck-in acquisitions that added to our expertise and service offerings.
Got it.
So size, scale, number 1. Number 2, team. We got really lucky to attract 2 of the only people in the world to have built a ServiceNow practice to 400 plus of revenue back in 2020. And that was Jason and Mark Toledo. Mark was on the board. Jason was the founding CEO. At the end of the day, you can point the team in the right direction or point the strategy in the right direction, but it's old-fashioned, 80% old-fashioned execution. And having folks that have been there and done that really matter.
Got it.
Last, what's the third piece? I would say the differentiation of what are you going to be known for beyond just size and scale. Correct. And so driving profitability, I think the days of, Tim, cover your ears, like just revenue multiples without very strong profitability is over. And so building just a great balanced business.
Got it. So let me check with Jason how much of that was reliable. So Jason, how did Mike enable that for you, right? So how did he help you to kind of scale to this size and create the differentiation for something for Tim to find it kind of really valuable or value add for him?
I've been getting the question a lot lately, from people that are thinking about building the next ThirdEra. And the first thing I tell them is if Mike was to give me $100 million again, I wouldn't build the next ThirdEra. I'd build something completely different because I think that was right for where we were, but what is needed now is something different. I uniquely decided to work with Mike and Sunstone Partners because one, they were extraordinarily credible, high integrity, gritty, scrappy PE. Two, they have an inordinately high pain tolerance. We did 6 acquisitions in 10 quarters. We hired more people organically than we acquired in that same period of time. We deployed an unprecedented amount of capital in the ecosystem in that period of time, $92 million in 10 quarters. I don't think has been done by any other single company anywhere, regardless of size. And so, we were an outlier upon outlier. And as a result, we created an outlier result. That support really mattered, right? The transactions, when you're a CEO, you need to run the company. When it's growing that fast, you can't spend time worrying about a detail of an acquisition, right? And so we worked very closely together as one team to not only get the M&A piece done as an extended team within Sunstone, but also to focus on, building this business in a very short period of time.
Got it. And Tim, so when you look at ThirdEra, what do you think, what beyond the ServiceNow capabilities and the ecosystem, what kind of stood out for you? What made it strategically valuable for you?
It really builds on these points. It was clearly the leader, if you just look at independent ServiceNow companies, but the things that when you get into it start to tell you that it's the right one are things like, they did do many acquisitions in very rapid succession, yet when you would sit down with the management team, everything was very cohesive. It was completely integrated. The sales processes were standardized around the world. They had invested in really good FP&A and compliance-oriented resources in all the countries that they operated around the world. Second thing, very global, right? They were in all the markets that we really care about, the markets that ServiceNow really cares about. And so it took a level of, when you're looking at it outside in and figuring out whether to make a capital decision on it, those kinds of indicia really tell you things that get you comfortable because you know that there's a level of professional, institutional grade management and thinking and process and business system there that can that is what we look for when we want to bring something like this onto our platform. What we're really focused on is, how do they come and become a better version of themselves with the benefit of the resources that we can provide to help them accelerate, right? And so you need companies that have a certain level of maturity and vision, to do that, especially in a, what is a space that, garners pretty significant multiples, right? So that was really evident as we looked at ThirdEra, that it was really just the quality of the execution and the intentionality and the thoughtfulness that was really pointed at being a institutional grade, global 2000 serving client organization, notwithstanding the relatively smaller scale. By far the biggest in the ServiceNow space, very significantly above 100 million in revenue, but much beyond that in terms of just the sophistication of the thinking and the intentionality of what they had set up.
And Erica, I think 2 questions to you. I think the first is, how valuable do you think PE-backed partners are whenever you kind of assist a partner? The second is, you have ServiceNow Ventures as well, via which you do invest. I think one of the names here is Prodapt, I think. Manish is here, and Harsha, who enabled that deal, was also here. So how do you kind of view that from both angles, right? As an investor, as well as when you look at, say, ThirdEra, which is a Sunstone-backed.
Yeah, I think to answer that question, it's important to understand what we look for in our partners. And we've been through a real, in my view, revolution that we've driven over the last 4 to 5 years, right? If I think 5 years ago, partners were delivery capacity. Really, at ServiceNow, that's how they were viewed. PE backing, I don't know that I really worry about, maybe. We evolved that to our partners being co-sellers, okay? Alignment with the field, culture becomes important. I'm not sure PE is super critical. Now, where we are right now is we look at our partners and say, you need to open up markets. That means you need to have IP. That means you need to have industry depth. That means you need to start to have things that require investment. Okay, PE starts to become much more important. Now, where are we heading? We want our partners to be market creators. We want our partners literally coming to us to build new businesses, because to your point about the exponential opportunity, I think the quote I heard is from 2015 to today, our TAM as a company went from 39 billion to over 250 billion, right? So the TAM keeps expanding. We need our partners to truly create new markets. Now PE becomes paramount, because we need that our partners to have that level of investment to be able to make big bets, to build new businesses, to build new solutions that can open up new TAM beyond what we have today. And we need it to happen at speed. So I don't think it's binary. Are PEs important or are they not? I think the question is, are they important in the context of where we're taking the partner ecosystem on behalf of our company? And for me, the answer is yes, because of where we're going. That doesn't mean we only work with partners who are PE backed. We don't. It means I see the value there. And in terms of ServiceNow Ventures and ecosystem ventures and what we do, we look to make investments where there is a PE firm, right? We don't see this as like, well, are we going to invest or are you going to invest? We're like, how do we partner together and make this scale? How do we throw in something and you throw in something and we get to the outcome that we want? So I think that's probably the strongest signal of how we think about it and where the opportunity is. But I do think it really comes back to understanding the vision for the partner ecosystem at the company. And at ServiceNow, our partners are paramount. And I think Jason could attest to this. I mean, this was one of the first things. I came from a partner, and one of the first things I wanted to do was be really clear on the value of our partners and put our partners front and center in everything we do from a go-to-market standpoint. That was a cultural shift, but it was purposeful. It was about creating revenue acceleration for us, but it was very much about creating opportunities for our partners. So we became a very attractive place for our partners to invest. And I think if you ask the partners, either in the room or in our broader ecosystem, they would echo that that's the culture they feel. And so it just creates more opportunities for everyone. And that's what we want to do.
Sure. So I think the third theme that I'll shift to is future of services, because I think that's the next topic of the next panel as well. And I just want to understand in our context as well about how do you kind of look at it. So probably Erica, Jason, either or both of you can answer that. And I want to see how do you see the ServiceNow partner ecosystem evolve as well, right? Would it change? I mean, yes, there is a certain rules of the game that you've set right now, but is it set to change drastically? And that kind of changes how Mike looks at companies, how Tim looks at companies, and how we'll have to look at them as well. So, you want to go first?
I do.
All right. Well, I mentioned earlier that if Mike was to give me another 100 million, I wouldn't build ThirdEra, right? So what would I build? I would build a highly specialized, forward, machine augmented consultancy. The specialization, I think, there's a unique pivot that's happened in the ServiceNow space right now. The platform is so broad. The TAM is so extreme that you can't be a broad partner. That shouldn't be your ambition any longer. You should be a very focused partner of depth with clear value. The futures is, in my opinion, the clear value next lever. I think that getting customers to understand that eventually they're not going to think about applications anymore. They're just going to think about an enterprise library of services where they have a technology experience that is augmented by agentic and AI bots, that is underlying a contextual data model, that is serving them the next best recommendation of areas they should spend their day on, and resolving things that can be done repeatedly, consistently, and predictably on its own is the future. And a consultancy in the ServiceNow space now focused on that will be very valuable and very useful, I think, to customers. So I think it's a generation of specialization over the next 3 to 5. The notion of a broad, cloud consultancy focused on platforms was a great idea in 2013. It's kind of waned, and now it needs to be about highly specialized, industrial in some cases, but very focused on specific value add, not the breadth of the platform.
Yeah, I would double down on that. As Jason knows, we fundamentally changed our partner program to put specializations front and center for this very reason. You can't be everywhere. Be really good in 1 or 2 areas, 100%. Solutions first. If you're doing everything through people, you're going to have a profitability challenge, and you're not going to be able to compete and deliver what the customers want. So I want to see investment in solutions as a part of the way you're delivering. I think that's what you mean by industrialized, and I agree. And then an ability to really go end to end and to deliver those outcomes. I just think that the customer's expectation is shifting, right? It's not about projects, it's about outcomes. Can you deliver it? Do you have the infrastructure? I would fundamentally change the pricing models. Forget rate times hour. That's irrelevant. Talk to me about value-based pricing and how you're going to embed that and put that first in everything you're doing, because I think the customers demand it. And I think when we're selling platforms that extend across the enterprise, you can't be thinking in the context of projects. So I think that's really, really important. And maybe if this is the last time I'm going to be able to speak, I just want to say both Cognizant and ThirdEra are some of the most valuable partners in our ecosystem who we love. And they've really stepped up and demonstrated what it means to be a great partner in the ecosystem. I think they're a great blueprint for what we look for and the kind of investment and partnership that we need. And also, Jason's a great bet. Always.
So Tim, I think as Erica reiterated as well earlier, to your aim of $1 billion plus, do you look at more acquisitions in the ServiceNow ecosystem? Or do you think there's enough already?
We're always looking, yeah. But, if the question is, will there be more M&A around ServiceNow? Absolutely. And I think this is not a 2 to 3 year thing. I think this is a decade kind of thing, in the sense, you look at the rate of new company formation in our space, there will be many, many very interesting ServiceNow companies to acquire in the years to come. From my perspective, ServiceNow partners, companies that are enabled by ServiceNow, it gets more and more interesting as you play on and you think about that bigger vision that is the $250 billion TAM. So absolutely, we're open for business, and and I would expect that you would see a lot more in the coming years.
So Mike, what type of tech services firms? Is it ServiceNow again, or it's something else? What do you look at? The new world?
I could tell you, but then I'd have to kill you. Or at least kill Gabe. No. We look at it in cohorts, or as I tell my kids, pigs through pythons. Where is the spend happening at the enterprise today? How is that going to flush through? What are the pigs that are going to come behind it? Mm-hmm. If it's agentic and AI, shift of spending on hardware and data centers is going to be followed by this agentic wave and building into applications. What are the pain points with that? Why do those 85% of AI projects fail? I would say 2 areas that are pretty obvious is the data piece and the cleanliness of the data. The other piece is the business process kind of change management piece. So we spend a lot of time thinking about that. And so that means both in managing the transformation, but also we think about business process outsourcing, which was a bad word, a couple of years ago. But I think there's some really interesting automation opportunities there. But at the end of the day, we see this all converging into software engineering, and the need still, albeit in a more automated way, for expertise in automating the software engineering journey, and that's why I've invested in KMS. So that's just some of the ways we think about it and some of the areas that we think will be those pain points as the pigs go through the python.
Interesting. So I think at this point in time, we don't want to throw it up to the audience. Any questions that you might have to any of the panelists? Happy to kind of take that.
Hi, thanks everyone. Amazing talk. You talked about specialization and focus on industry. Just curious, which industry ServiceNow sees a lot of demand in?
Yeah, we have really 6 major industries, and I would call them sectors. The industry level is hard because it's irrelevant. It's sectors and subsectors. I mean, for us, it's banking, telco, tech, manufacturing, healthcare on the payer side, public sector. That's probably the broad one, which we're heavy in federal, trying to get into state and local more. Higher ed, a little bit less. That's where we're focused right now because there's only so much we can focus on. We have another 4 that we're planning on for 26 that we're going to double down on. But if you look at our portfolio of companies, we're playing in every single industry sector and subsector. To me, those are ripe opportunities for our partners to not only play in, but to own. And I mean own from an IP standpoint all the way through to managed services with implementation in between. So I would be looking at where we're focused. I would also be looking at where we're not focused. There's opportunities both places.
It's everywhere. 85% of the Global 5,000, right, is ServiceNow. So it's hard to abstract by industry, but there certainly are heuristics around it. But you can pick where you want to go and go. It's the net, right?
Yeah, I would. If you're looking to get into the ServiceNow space, I wouldn't just look at one vector. I would look at 3. I would say what industry for what workflow in what geography. When I say specialization, it's the combination of those 3 that need to come into play. And I know that feels very specific, but when you break apart our TAM, you'll find at every one of those intersections, there is massive opportunity to dominate.
Hi, this is Karthik. The question is to both Mike and Erica. Couple of things. One, you mentioned about workflow to work itself being automated. And what is your sense of tech services impact in the near term, while the medium term could be bright? And what is your view on it in the short term? And similarly, some of the industry segments that you talked about, Erica, do you see that there is a mix or shift because of AI in some segments taking leapfrog compared to the other segments?
Yeah, I mean, I'd say that a little bit joking, like why would ServiceNow stop at workflow and not just do the work? It goes to my BPO comment. Like I just think there's a short and medium term opportunity to automate a lot of stuff that is low margin, lowish margin business, not just because of AI, but because of broader automation technology. And I think in the short to medium term, there's going to be a lot of value creation there. If this kind of SaaSification of services or service as software happens, yeah, there's going to be a lot of winners and losers. And who ultimately wins? I think at the end of the day, we have a rule of thumb, and it's every services investment we invest in is very much IP enabled and very much a technology company, but they're not a product company. They don't sell software. And if you try to mix those two, it's kind of a religious battle. And so I think if these two are going to converge, merge, whatever, which religion's going to win from a execution, management, expertise perspective? I don't know. That's pretty deep, but that's how I'd answer the first part.
Can I add something to that? Because I think you're right about the bridge between what was BPO and services. I will also say that if you look at the way those processes are largely run globally, they're kind of consolidated or centralized to large companies. They're going to struggle to rip out their revenue with next generational technologies. So there's also a massive moment right now to bridge that gap and go grab that share, because those companies that are delivering those services are going to lag, not lead, because they don't want to rip the revenue out. And these next generational technologies will absolutely do that.
that is looking bright in the medium term?
Yeah, I think we call it kind of the prevailing wind versus the number of vectors that are pushing the boat, right? Like they're application development, software engineering is a great one. Like, is that TAM going to see a short-term shrinking because of automation and revenue models? Potentially, but the tailwinds that are behind it, a couple of which I mentioned, I think are the prevailing driver of sustained long-term growth. So it's definitely a mix. And the way we see it is there, like Jason said, there are going to be a lot of winners and a lot of losers. There will be a lot of disruption. And if you don't lean in hard, you're going to be a loser.
Yeah, I mean, I would say with regard to industry, I mean, Jason said it, every industry, every segment, I think there is opportunity in, but is it coming from regulatory? As I think about financial services, that's a huge driver of what needs to be done. You look at the federal government, you can't look further than DOGE to see why we're going to see that trend. You talk about payer, now all of a sudden you're talking about the patient experience, and it becomes more of a strategic reason. I think if we look across every industry and every sector, we're going to see some reason and some driver that they need to get here. I mean, this is AI and automation, because I agree, Mike, it's both. It's a ubiquitous trend. I mean, and that's what's so powerful about it. And you cannot not do it, because it is the only path to true productivity and running an efficient and effective organization moving forward. So, I mean, we're in a moment here, and I don't think any industry is going to be separated from that at all. I think everyone's going to be impacted. That's why our TAM continues to increase. And on the workflow to work, I totally agree. It actually drives me crazy to talk workflow, because I think when people think workflow, they think like it's this, it's configuration that we do. I mean, the reality is, and I said this way back in the day, I'm like, what we do is we fundamentally change the flow of work across everything in an enterprise. And we are playing at the work layer. Actually, I think this is our biggest differentiator, if I could, in the AI space, because I think a lot of these companies, some of our competitors, are building really just very expensive and fancy chatbots. We are not. We are actually building autonomous agents that are going to fundamentally be able to do work end to end on their own and keep humans in the loop, not in the execution of the process. And that nuance is really important as we talk about the AI space, because it is very different. We are absolutely playing the work game. And that's what we see as our one of our big differentiators.
I think our questions are bleeding onto the topic of the next panel. So, and I think that's it. Thank you so much for your time.